G. Chokalingam is now with us. Choka, what's the sense that you get? PNB were expected to be weak, but they have been much weaker. 5,000 crores of losses.
Yeah, this is, along with other 6 banks, disappointed, no doubt about it. You have a net NPA figure that has spiked. That is very important.
Right. So the net NPA, I have the percentage number. It's 12.9 versus close to 8.5. The expectation that we had was 10%, which is a 140 basis point rise, but it has risen quite a bit.
It's pathetic. Net NPA percentage is 8.6%, worse than what it was in
the net NPA.
Net NPA percentage is 8.6%, one of the highest in the POC banking segment. It's really, and gross NPA, even after all these provisions, it is almost 13%, which is very scary.
Right. I was just looking at the provisioning number. It's about 10,000 crores versus 3,700. What do you make of that?
Yeah, that is the point I'm saying. Provisions, despite tripling, you have a highly elevated net NPA. That is the cause of big concern. Your net NPA year-on-year basis has gone up. Outstanding net NPA has gone up by more than 100%. Even sequentially, it has gone up by 52%, despite, tripling the provisions. And in terms of percentage, also it stands close to 9%. So really, a big cause of worry.
Right. But, Choka, what do you make of, these numbers coming in? The balance sheet size, of course, is shrinking in, right? That is something that one would take a note of.
Yeah, what has happened very interestingly, or, on a negative note, because of the huge spike in NPAs, suddenly all these banks, which were quoting at a steep discount to adjusted book value, now they started enjoying premium. Like BOB now, it has become 100% premium to adjusted book value. So that means going forward, unless they pull down the outstanding net NPA substantially, there is no attraction for the investors to buy the stocks. So I would, stay away from these kind of stocks.
Right. But, a lot of people always argue that, this is the worst. They have probably taken, the worst hit. How bad can it get from here on? That is not something that one should focus on, right?
No, that is true, but not for a bank like a PNB or Bank of Baroda, because the point is that you have a net NPA of 9%. You have, suddenly these banks available at, huge discount to book value. So even if it has bottomed out, going ahead to justify the current valuation of, 100% premium to adjusted book value, they have to improve the bottom line and the quality of assets substantially just to, justify the existing valuation multiple. So therefore, I would look elsewhere. For instance, you look at, bank like State Bank of Bikaner, it is net NPA is less than 3%. It's making profits and it's going to give good dividends. And not only that, it's available at a 30% discount to book value. So why should you buy these kind of banking companies which have got 100% premium to adjusted book value and still have a very, very highly elevated outstanding net NPA? So according to me, bank like PNB, Bank of Baroda, they have to work very hard only to justify the current multiple for the next 6 months to 12 months.
Right. Choka, can you also just explain us the point that you were making? Despite such provisioning, gross NPA is high. What do you mean by that?
See, the provisions in the current quarter is 10,485 crore.
Right.
Sequentially, if you see also, the December quarter, the provisions were approximately 3,800 crore. Now, this has become 10,500 crore approximately. So, nearly tripled provisions. Despite that, if you look at the net outstanding NPA, that has grown to 35,422 crore in March quarter from about 23,000 crore in December quarter, which is about 50% spike in the outstanding NPA. And, particularly for this bank, if you look at the reserves and surpluses, it's about 40,000 crore and the outstanding net NPA is around 35,000 crore. So, the net NPA is close to its net worth. So, it is at a huge premium if you take adjusted book value. So, to justify the current price of even 75, it is a long way to go. Right now,
Right, but
PNB is trading at 2.8 times adjusted book value. 2.8 times. And this is the historical peak valuation, the PSU banks ever enjoyed, if we see the last 4-5 years. To justify this 2.8 times P multiple, it has to improve the book before it can, justify any upgrade in the price to book value multiple.
Right. Choka, just stay on with us. Gaurang Shah is also now joining us. Gaurang, what do you make of the PNB numbers? As bad as it could get?
I only hope that there is some light of hope, Pankaj, at the end of the tunnel, because last quarter was a disaster. This quarter equally there is issues, and I would want to hear the management commentary in terms of when do they expect these problems to end and positivities to emerge. Given the kind of run rate that they are going at, I only hope that the stock and the stakeholders have something to, save in terms of their investments.
Right. Such sort of write-off, such sort of loss coming in, definitely it will lead to a very, very slow growth going ahead because the balance sheet size would contract.
Well, that is what I'm worried about. That I hope that if this is the kind of run rate, and I hope that those numbers don't have huge slippages on the quarters to come by, Pankaj. Otherwise, the question is that when do the problems end and how much capability does the management has to save the balance sheet and to keep the interest of the stakeholders intact. The sectors which are contributing, Pankaj. I believe last time they had given a commentary that, metals, real estate is some of the sectors which state electricity board are creating problems. I wonder what is the amount in question for the problems to escalate to this extent.
Right. Choka, would you agree? The growth going ahead would also be a big question mark. I just calculated the NII. It's a decline of 30% YOY there in this quarter.
Yeah, definitely, because I would agree. As I said, your net worth has shrunk so badly, because of these write-offs. And in fact, as I said, the outstanding NPA is 35,000 crore. The net worth is only around 40,000 crore. So if you adjust for the outstanding net NPA, it's going to be a big problem in fulfilling capital adequacy and then have growth in future. However, to be very fair to this bank, as compared to 10% degrowth in the credit for Bank of Baroda, luckily and fortunately, PNB has posted a 8% year-on-year growth in the credit, which is a big positive because most PSU banks are showing solid degrowth in the business. So almost, at last there is some hope that going forward, since the business is growing, they would be able to, slowly tide over the problem. However, I would not buy the stock at all. As I mentioned earlier, adjusted book value is only around 27 rupees per share, and the stock is trading at 75, almost 3 times. And this kind of valuation is not at all justifiable for a PSU bank, even if you go by the history.
Right. Hemendra Hazari is also now joining us on the phone line. Hemendra, in our interactions earlier, you have said that there would be a tsunami of NPA coming in. Is that coming in, or it's just still the start for these PSU banking names?
This is the beginning. If you're seeing these type of large losses, they're going to start coming into the rest of the PSUs, and then the private sector banks will also get impacted. This only tells you the acute stress which I've been cautioning all investors for the last 1.5 to 2 years. But this is the excesses of the boom that India enjoyed, which was literally financed by the Indian banking sector, and they've clearly taken on risks which they did not understand earlier. And this is but a result of that. So this is to be expected. Things are not going to improve, sadly, and this is what now analysts should expect from the banking industry. And as a result of this, you can also think that what will happen to corporate results, because a lot of the pain that you're seeing in banking today is because the corporates are suffering.
Right. How would you look at, now the share of private banks increasing because, these banks with the sort of balance sheet that they have shrunk, they would not be able to grow?
Now, there is a debate here. Private banks are growing because they're saying they're doing refinancing of the high-quality loans of the corporate sector, which are coming up at lower rates. Now, I believe one has to be extremely cautious of credit growth in this environment, and therefore any bank which is growing at a significantly larger percentage than the industry should be viewed with greater caution. Because if there is widespread evergreening happening, these banks are just deferring and compounding their problem.
Right, and with such huge provisioning coming in, now that Q3 also we saw huge provisioning coming in, Q4 also huge, you cannot rule out further provisioning?
So most certainly you cannot rule it out, because a lot of this provisioning that you're seeing today is for your large corporate accounts. Even this asset quality review by the Reserve Bank of India was done for the large corporates. There are myriad small companies which are under acute stress today. Where I also understand there's widespread evergreening happening. So your SME sector is now going to be a big problem. And because of your poor rainfall, your agricultural loans and your rural loans is going to be a problem. And now even your unsecured retail credit, which banks have been very aggressive about because to compensate for the poor corporate credit growth, that will also result in a problem. So we are going to see a systemic problem in the banking industry. And it is extremely important that the government and the Reserve Bank of India act extremely promptly. And they have to do this by a massive recapitalization, at least of the government banking sector. Otherwise, you're going to have a full-blown crisis on your hands.
Right. Hemendra, just stay on with us. Choka, what do you make of what Hemendra was saying, that this probably shows the corporate stress that is there in the system, especially on the SME side?
No, I have a slightly different view. This is the inheritance of the past pain all these banks are going through, because they inherited a huge burden from the past. Many of them are related even to 2007-8 asset bubble created by the infra companies. And now this problem got elevated because of the stringent norms from the RBI asset quality designation. So that has led, in my firm view, in the last 12 to 24 months, the incremental stress is coming down. It is only the recognition of the past pain. So going forward, I think this is the worst is getting over. Certainly from June quarter onwards, the addition to NPA should be marginal. Definitely, it will not be to the proportion which we are seeing in March quarter over December quarter.